What up, everybody? Welcome to the Chaos. My name is Brad, and that is Don over this way.
That was me.
Yes, it's that way. That's Don over there from the Don Frown Show. He's joining me again this afternoon to react to a ton of earnings that are happening today. So we have Alphabet, aka Google, Microsoft, Chipotle, Enphase, Spotify, Visa, and so many more. If you want, those are the ones that I'm going to be reacting to specifically. But those are the ones that I laid out and I've already prepared for. If you guys want me to take a look at some other ones, I would be more than happy to, and I know that Don would be happy to pull some of those up as well. It's just to name a few that are going to be popping off this afternoon that I didn't mention just yet. There's Texas Instruments, Skechers, Mattel, just a myriad of stocks. So if there's ones that you guys want us to take a look at, please shout it out in the chat. We are simulcasting right here on Don's channel as well, at the Don Fron Show, as well as at Own the Chaos. So hopefully if you guys find us both wherever you're watching from, welcome. Hit that like button, hit that subscribe. Don, what's up, man?
What's happening? Well, stocks are up.
Yes.
It's weird because everyone said the economy was bad and everything's going to be bad. And I don't know, like maybe if you guys were subscribed last week, you got this heads up. Maybe you're in some things, maybe you're green, maybe you bought some things. Oddly enough, even Bitcoin's up.
Ethereum shot up 10% today. Crazy.
It really?
Shot up 10% in about I don't know, 20, 30 minutes.
I wish Tamp was here because you know what beats that? Cardano.
It's up 15%. So. Oh, man. All right. So before we get into anything, guys, I want to make sure that I'm shouting out my starting five. So I got Pastor David Hopper in here, Michael Hanna, Bodie Beard, Savvy Money Show, and it looks like I also got Jeff Chocolate. What's up, my man? You guys are our starting five. If you missed the starting five, it could be because you're not subscribed to the channel, so make sure you're hitting that subscribe button and hit that notification bell. Get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday, to react to these earnings. Would love to have you guys hang out with us and be a part of the crew. You guys can see some of the links in there as well. We'd encourage you to go check out the Chaos Crew. I see all in on Skechers from Colton Blake.
My drip drowns the haters.
That is hilarious. So yeah, let's talk about the markets a little bit. So SPY is ripping right now. I'm looking at the SPY and it's looking like it's trying to close at the high of the day, which is right around where the 50-day moving average is at about 385 thereabouts. So that's a really hell of a bear market rally that we're seeing here. Not ready to say we're out of the woods at all, but it's been an absolute monster of a week so far, and specifically today. I also wanted to shout out my top three penny stocks that I talked about with you guys last week before we get into anything else. SoFi, Drive Shack, and most importantly, Mullen Automotive. MULN also just ripped face. It's up 120% since we talked about it last week. I don't know where this stock could be headed from here, but what I do know is that I don't think that the story is done being written, in my opinion. I think that there is a little bit more for this to go just because it had come down so much, given the fact that the overall market's moving the way that it is as well. I think that this has got more legs to it. So I'm going to pull up the chart here real quick. It's kind of hilarious when you look at the chart. Yeah, here we go. So here's my MULN chart that I have pulled up here. This is just your daily list. So let's go a little bit so you guys can get some perspective on this. There's been quite a few bits of news that have come out. They closed on the stock that or the company that they were acquiring that was going bankrupt. They filed for Chapter 11. And then they also now have the ability to kick off some of their the newer stuff over in Europe. Sorry, guys, I'm a little bit distracted here. So the news that just came out yesterday that made another splash in the stock was the European side of things. So they have their iGo EV that is going to be live. They're going to be releasing their iGo. I got to be honest with you, the car itself is ugly, but for $11,999, I mean, you're going to get what you're going to get. This is actually to appeal to the crowd that has either, that isn't quite as affluent, or maybe they just want to get a nice cheap EV. Only has a range of about 124 miles, but nevertheless, they have rights to sell this to major European countries. This includes the UK, which we know has been super big on getting EVs into their market and getting ICE vehicles out by 2034. So, I think this directly ties into their acquisition of electric last mile solutions. We'll see where that goes. Dry Shack as well. Like I'd mentioned, had a huge move. Let me pull that up real quick. Dry Shack also had a huge move. That's up now 14, almost 15% today. It's been up around 20% since we talked about it. Not really much changing here other than just it reacting to the overall market. And SoFi is also in that same boat. So SoFi is still ripping up just today. What an absolute monster for any of you guys who are looking into the penny stocks as well. Those are making some pretty serious moves.
I'm not going to get my SoFi at 3, or am I? We try to say here.
I don't know if you're going to get your SoFi at 3. Let's take a look at the daily chart. We could, though. I mean, if the whole market just capitulates like we think it could, I think SoFi it has the possibility of getting to 3. But if I was somebody that was looking to get into SoFi and I already had a good long-term approach to it, and I knew that SoFi wasn't going anywhere, why would why would I chance it? I guess is what I would be asking anybody for that reason. So if you guys are looking to just dollar cost average into something, I think SoFi is fine in the $4 range. You get it at $3, you get it at $4. At the end of the day, if you're going to hold it for a while, who cares?
I agree. Yeah, time frame needs to match your trade for sure.
Yeah, absolutely.
I do have to. Nima says, "I'm back, Don." What do you think to buy SQQQ? I think I'd pump the brakes on that. Like maybe we pull back tomorrow. Maybe tomorrow is turnaround Tuesday. Say Tuesday.
Today's Tuesday. Yeah.
Oh well, shit. Never mind. You guys are so cool with your jobs, and you guys know what days are.
I know.
Like Monday through Friday.
I thought today was Monday all day long.
No, I do think the markets are a bit overbought, and I even told my chat like I'm gonna go short if we turn around. But wait for the red candles to come. There's plenty of meat on there. I think short term this is a bear market rally, so I would ease up on the let's go ahead and just short this thing. If you don't want to be long, let the bulls do their thing and then wait for it to turn and then try to short it. Then grab SQQQ because you think the market's up right now. You grab SQQQ and then Google beats and then just sends it. You'll just wake up. You're already in recovery mode. It's just not a good way to start the day.
Yeah, absolutely. All right, so good stuff there, guys. We have, like I had mentioned at the top of the show, there's 138 of you in here between my channel and Don's channel. Would love it if you guys just hit that thumbs up. We would greatly appreciate the support. So, Alphabet looks like it's selling off. You can see that on your screen right now. It looks like it's sold off just slightly. I think this is probably maybe some profit taking before we get into earnings for the people who are just in casers. Things don't go their way. They're looking to take some profits. Estimated earnings per share is $1.26. $70.65 billion is the estimated revenue. Only 2 revisions from analysts over the quarter with 27 downgrades. Only 2 up revisions from analysts and 27 downgrades. Pretty crazy. I still think that this is a stupid, cheap stock no matter what happens. I also think that, the reaction that we saw from Snap doesn't necessarily reflect that of Google. We know that whenever Snap reports earnings that Google, Meta, even Twitter at times, not so much now because Elon's taking it over, but we see that a lot of the socials react to Snap's earnings because it's the first earnings in the social media space, in the ad spend space, and Google reacted to that accordingly. You could see that it came down. I think, in my opinion, that it was a bit unwarranted. Here's the candle here. So let's zoom in on this. This is your daily candle. This one right here was last week, the day after Snap's earnings came down. So Alphabet came all the way down as low as $97 a share, ended up going all the way up to back up over to 101, and it hasn't looked back since. I think that's the right move, in my opinion, because Google is not Snap. One thing that we saw from Snap was that they actually grew in daily active users, which if that's the case, then that bodes well for somebody like Google who actually knows how to make money with their product, whereas Snap doesn't. Snap grew in users and still couldn't figure out how to make money with their platform.
There's 2 noises you guys should have heard. That was me closing the position and Google just sold right off. And then I had to just buy some right now. So hopefully they send it. But I know if I don't say it now, I'll say it after the bell. Someone's been go, oh, yeah. So I did just buy some. Ivan apparently wants me to go to jail. He's like, Don, as my financial advisor, do I buy Google right now? No. You do whatever you want to do. That's it. We're definitely not financial advisors.
Hell no.
Nothing. Right now,
Hell
I'm
no.
sitting in my basement talking to myself, hoping there's somebody real on the other end. So I don't know if you want to take that advice.
I'm just talking into a piece of equipment made of plastic and glass at this point. So, no, in all seriousness, guys, yeah, definitely make your own informed decisions. We're here to just talk shop essentially and kind of give our own opinions on what we think can go where. Sometimes we're right, most of the time we are. Sometimes we end up being wrong, and so sometimes we just want to make sure that everybody is aware of that and that we aren't, professionals. However, it is funny that even if you do have a piece of paper or some letters behind your name, that you somehow are more accurate than we are, which is hilarious because
Yeah,
it's usually not the case.
Professionals. We've gone over what some of those professionals have said before. Let me know when you find one that's accurate.
Right. Oh, just checking it. Yeah, Mullen actually popped green here. It was red there a little bit, but anyways, so the other stocks that are going to be reporting today, Microsoft, obviously in this conversation as well. Now, this is one of the more expensive ones in the tech space, but I think that there is also some decent reasons as to why Microsoft isn't going anywhere, especially with the Azure side of things. Last quarter, they grew their Azure business even more. I think that that's probably going to be front and center for their earnings as well. $2.31 per share, $49.69 billion in revenue. And Don, I think that there's just too much pessimism on these stocks. Out of the 27 major analysts that are evaluating Microsoft, one upward revision, 26 down. I think that just the we could just take the contrarian approach here. Yeah, it's at 24 times next year's earnings, but the fact of the matter is that everybody's down on Microsoft. I think that there's some reason to be optimistic about this, despite all that.
I agree. I don't know why I hate Microsoft so much. I never really trade it, but yeah. Gosh, I hate to say I'm 50-50 on this one. Because a part of me is like, it's a big company. The other part's like, what do they even do? Like, I know what they do, but like, it's just like, where's the hype?
I understand what you're saying. I think that, the Azure side of the business, the cloud side of the business is really what's going to be front and center. And I think that that's what a lot of people are going to focus on. The other thing that I think people are going to focus on, and this goes for Alphabet too, and some of the other major tech companies, that is the Forex issue that they've been dealing with. Microsoft's been talking about this now for the last 2 quarters, as it looks like it's about to close at the high of the day, which I got to be honest with you makes me a bit nervous. Yeah. Even though I think that they should do well on their earnings, just seeing some of these stocks close at their highs of the day doesn't necessarily give me all the warm and fuzzy feelings, but we'll see how things shake out. I feel confident about Microsoft going into these earnings, and listen, they're not going anywhere anytime soon. You can look at the chart just about less than a quarter ago. This is at 293.56 as the market now officially closes. We didn't get to preview too many of the other ones, but we will go ahead and react to these companies as they release their earnings. But Microsoft was as high as 347. Granted, it was way too high up at those levels, but I think that now sitting at 250, it's time to at least give it another look, in my opinion.
As far as investments go?
Yeah. I mean, if you look at Microsoft a year from now or 2 years from now, you're going to be wishing you had it at 250, in my opinion.
If you at least, if we're talking, because next year might be choppy. So I'm still kind of reserved on the let's be mindful allocation.
Yeah.
But if I was going to blindly throw some money in there and I'm not going to check it for 2 years, I would think we're probably up at that point.
It looks like it's already starting to move. We'll see.
I'm going to stick. Yeah. See, then it goes up, then right back down.
Right.
That's what I'm nervous about. Is like, even if it is green, like that's about to go off the charts.
Now it's tanking. Now it's tanking.
Somebody called it out earlier, and I hope he's right. He said Microsoft down, Google up.
Hey, you want to pull up your charts, and then I'll pull up the earnings numbers?
Yeah, give me one. Let me adjust my. If it looks like I'm looking at the ceiling, it's not because I'm weird or watching fly. Let's get out.
All right.
Ooh, so right to a zone. Interesting.
Yeah. Well, Microsoft is.
Yeah.
Yeah. There we go.
So that's a weekly zone. So that bounced or
So
not
pull.
bounced. As far as like investments go, like if there's a time to so weekly time frame, that whole candle takes 1 week just to form. So you can't really talk about that until the Friday close. But if I'm
Right.
talking about I want to buy and hold this for a couple of years, then I think these purple zones are actually great deals for that. This indicator though, you guys have never seen an indicator on my screen. I was going to talk about this with my chat tonight. It's not Bollinger Bands. It's actually the average true range for the day. I was trying to find a way to help my chat out with the because everyone has this problem of it tags out and runs. It's specifically why I watch the same tickers over and over again because I know the average true range. I know like the normal volatility, so you put your stop loss in the right place. So ignore these faded lines just for some trading stuff.
So Microsoft came in. They actually beat earnings estimates at $2.35 versus a $2.32 estimate. They came in and also beat on revenue, $50.1 billion versus $49.56 billion. That is a pretty solid beat. Now all I'm looking for is guidance. That's probably why the stock actually ended up moving down. Could have something to do with that. Maybe they didn't move on their guidance, or maybe they lowered it. In fact, we'll see what they have to say. But those are your numbers just right out the gate as I go ahead and try to dig a little bit deeper on these earnings numbers. That is
Yeah,
for Microsoft.
Google is out too,
All
and
right.
man, not to say we called this out, but if you're in my chat, this is something we definitely talked about. Rushing into a zone right before earnings, not the best play.
Yeah, just before the close today, I had mentioned that it makes me a bit nervous to see these stocks close at the high of the day. So it looks like they came in revenue wise. This is Google, by the way. Revenue came in at $57.3 billion versus the 58.2. So that is a miss. Earnings per share came in at $1.06 versus $1.25 that was expected. So they missed on both top and bottom line on revenue as well as earnings per share. That's a big bit of a surprise from Google. I thought that we could see a beat on revenue, but the earnings per share, the big miss on that. That's a bit of a shock.
Yeah, it looks like Snap just gave us all the heads up we should have seen coming. I was
Yeah,
hoping Snapchat was maybe like the lower end on the totem pole, and then Google's still huge.
same.
So honestly, at this point, I'm curious if I should be shorting Facebook, unless they're just jumping off a cliff right now as well.
Q3 cloud revenue for Google was at 6.87 billion. The estimated there was at 6.61. Uh, or as I mentioned, earnings per share $1.06 versus $1.25 estimated. 57.27 billion versus the 58.18. Operating income was at 17.14. That has to do, I bet you that has a lot to do with what we had mentioned before. Forex, the exchange rate, the strong dollar really kind of killing these stocks, as well as inflation, higher salaries and that sort of thing. Operating income to be that much lower than expected. I would imagine that the biggest impacts to that are probably those two things.
Mm-hmm. Sorry, I had them sharing their my OnlyFans on my chat again.
That's all good.
These
That's all
bots
good.
are crazy.
I know, it's insane.
Man, do I want to buy some Google or what? Where's Ivan at? You're welcome. All right. How do you feel about that?
So, just for those people who are tuning in, make sure let's let them know what they're looking at here. So, Don, it looks like on the left side of your screen that you have Meta platforms pulled up.
Yeah. I wanted to see if this was moving because I was thinking like the way Snapchat and Google performed, like I should probably just short Meta, but it looks like that boat's already set sail. So
Yeah, and it looks like Alphabet is really still tanking. How far down are we percentage wise here?
I can measure it real quick. At the close, 7%, just shy.
Yeah, I see that now. Man, what a huge drop. So if you guys are just tuning in, Microsoft came in and actually beat on earnings per share and beat revenue. Google did not, however. Google ended up missing on both top and bottom lines. They missed on earnings per share coming in at $1.06. The expectation was $1.25. And then they also missed on revenue as well. Pretty tough day for Google right now. Still think that the stock is cheap, though. I mean, it's down 6.5% right now, and it may end up having a couple of a bad few days. But man, with looking at Alphabet right now with a forward P, and this is as of the close of 20 times next year's earnings, it's going to be in the teens as of tomorrow. So I think that this is going to be something to really kind of continue to watch, because Alphabet's just not going anywhere. We can start taking advantage of the overreactions. I think probably makes sense over the next couple of trading days. Maybe not going right after it and catching a falling knife here or even tomorrow. That wouldn't be my strategy, but I think just giving it a couple of days to bottom out and start moving its way back up probably makes all the sense in the world.
Well, if you're an Enphase, you're at least softening the blow a little bit. Looks like those numbers.
Bro, last quarter, Enphase absolutely crushed it. We didn't get to it before they actually released their earnings, but I was very optimistic on Enphase given the growth that we saw last quarter. Last quarter, they grew 60% in Europe, quarter over quarter. That's not year over year. That's quarter over quarter. Their estimated earnings per share was $1.09. Revenue was expected to come in at $615 per share. Zero downward revisions for Enphase out of the 30 institutions that cover them. ENPH has been Europe's answer to their prayers as far as energy is concerned. They saw Q4 revenue 680 to 720. That's guidance 680 to 720 versus the 660 that was expected. Earnings per share of $1.25, beating expectations of $1.08. Revenue came in at $634.71 million, beating expectations of $610. So a really strong beat everywhere, all over the place on Enphase. And I'm looking at the stock right now, and it is popping off here. It is looking like it is up around 7.5%. Huge boner candle here right after hours.
Yeah. What's funny is my buddy called me the other day talking about solar, trying to get my opinion because he just got it. He goes, "They're Enphase. Is that good?" Just laughing and everything about everybody talking about the stock. I was like, "Yeah, they're probably all right."
Yeah.
It's just funny seeing like he's in Oklahoma right now, and I guess they're just taking over like sandstorm style down there. Everyone's getting it.
Oh yeah.
Yeah. And I say it because someone's starting to think Enphase is cooking the books. And I don't know the way the government's paying for solar right now.
It's not just the U.S. though for Enphase; it's Europe as well. I mean, Germany is probably the largest client right now, and are paying them whatever they want, essentially, so they can upgrade their infrastructure, so they're not relying on that Russian natural gas from the Nord Stream pipeline. As we get closer to the winter months, that's going to continue to rock and roll. Enphase, yeah, nothing bad to say here about the company at all.
I don't know why it's not mandatory. Like, I don't care about the hippies or clean energy. Like, I don't care about that. But like the sun, it shows up every day. So like, why doesn't everybody have solar? That's what I don't get, especially with the solar tech we have now. Like,
yeah.
Why not? Like, because then you don't have to drill. Well, you could not drill, but oil. Like there's still so much you got to do when the sun just shows up every day. And if it doesn't, we got bigger problems on our hands.
Right.
Countdown's already it's begun, and we're done anyway. So every roof should have solar. I saw the idea of those solar roads. Have you seen those?
Yeah.
The little octagon things? That'd be amazing.
Yep. That's been around for a while, that concept anyway. Just wanted to touch on a couple of other things from Enphase. So quoting from the company in this report, they say our total revenue increased 20% compared to the second quarter of 2022. So again, a massive growth, 20% quarter over quarter. Demand was strong in our markets worldwide, particularly in North America and Europe. Our revenue in Europe in the third quarter of 2022, here you go. Here's the number. Last quarter, I said 60% in Europe. This past quarter, they are up another 70% compared to the second quarter of 2022. They are exploding in Europe right now, as countries in the region are accelerating their efforts to address rising energy prices and reliance on fossil fuels or Russia. I put that in there. Our IQ battery shipments increased 1% compared to the second quarter of 2022. Non-GAAP gross margin was up 42.9% in the third quarter. These are just all absolutely amazing numbers from them. 70% growth quarter over quarter, guys. That's not year over year like you're used to hearing. Quarter over quarter. When the last time they reported it was 60% quarter over quarter. I mean, unbelievable growth in Europe right now for Enphase. I mean, just insane.
That is. Man, I wonder if we should take a harder look at this. Hang on, I went to the wrong. try to keep this other chart. So as people are commenting, I'm going to toss their tickers out on the right here.
Okay.
But I wanted to. There's a solar ETF that I like. It's called TAN. But I was curious, and I know Enphase is one of their bigger holdings. But I was just curious, do I want to, like, I don't really own a lot of SPY. I own a lot of like the top 5 companies in SPY. So I was just curious, like, do I want to be in? No,
Right.
TAN looks like a decent buy.
Yeah, absolutely. So I'm looking at the people watching here. There's about 300 of you hanging with us. We certainly appreciate it. If you guys are watching on Don's channel or my channel, make sure you're hitting that subscribe button, that notification bell, as we do react to all of these earnings here. We'll be reacting to more of those tomorrow. I'm super pumped for tomorrow's earnings as well. We got another big week ahead of us, guys. Not just today, but we also have tomorrow's going to be Meta platforms, and we also have Ford as well that we'll be reacting to, among many other ones. You're not going to want to miss that, so make sure you hit that notification bell so that you can be ready for us when we go live at 3:45 tomorrow. Appreciate the likes there. Thanks, Josh Schuler. Thank you so much. So it looks like a couple of the other stocks are reporting now, or the report is out. Spotify looks like it's down right now. See if I can find those numbers here for you as Don pulls up the chart.
That one's bouncing around.
It looked like Microsoft, by the way, that we already spoke about, was trying to claw its way back to the green.
I wonder if the play is already out for Meta, though.
You mean like it's already priced in, so it doesn't matter?
Yeah.
Yeah.
Yeah, because after seeing this, I wanted to short Meta, but now that the red candle's there, not really excited. I wonder if I can, if this continues, because I know this will be a popular question later. If the red continues and we're red tomorrow, even with earnings, I'll probably take advantage of some of that and sell some puts. Let those puts get juiced up. If you can't afford to sell naked puts, do put spreads.
Yeah.
They'll be juiced up tomorrow and then out of the money. So hopefully it doesn't, because technically that's a bullish play. But all it needs to do is not hit that target and exceed it, and you make some free money.
Yeah.
When the bears get excited, like a little frenzy over here when they see this red candle, those puts will fill a lot easier.
So for Spotify, I'm looking at these earnings. I'm trying to find the actual numbers here. A loss of 82 cents was expected. $2.98 billion in revenue was also expected there. I'm not finding any hard numbers on Spotify just yet, but it looks as if the numbers weren't bad. Here we go. So actually, they were bad. So let me take that back. Sometimes you look on Twitter and people just have conflicting stories. But it looks like, according to Seeking Alpha, that Spotify missed on earnings at a loss of 99 cents, missed by 15 cents, which was the expectation. Revenue did beat, though. They came in at $3.04 billion, beating estimates on revenue by $20 million. That's not bad, but the loss per share obviously is going to continue to hurt them. It could be why the stock's just bouncing around all over the place. Mm-hmm. Monthly active users, though, this is always a big metric when you're looking at companies such as this, like a Spotify or Netflix or Disney with a Disney Plus platform. Everybody wants to know about monthly active users. How many people do you have on your platform? How many eyeballs can you monetize? Mm-hmm. They actually grew quite a bit, 20% year over year to 456 million. That's 6 million monthly active users above guidance. So that's actually really good. Net additions of 23 million represented our largest ever Q3 growth. And Q4 total revenue is expected to be around 3.2 billion, which I believe either comes in line or slightly misses, if I'm not mistaken, on that guidance. But listen, they missed on earnings per share, but revenue is up higher and monthly active users are up a lot higher compared to this time last year, which I'm a bit surprised about as far as that particular growth is concerned. One of the reasons is because, you hear about people going back to work and not being at home as much, and you would think that the growth there would have slowed down, especially from a monthly active users standpoint, and it's just not. That's actually really good for Spotify.
How much of that's from Joe Rogan, do you think?
I bet you it's a lot. So it's Joe Rogan, Caller Daddy, also a big personality on that platform, among many others. But yeah, I'm sure Joe Rogan's a huge part of that.
I was actually a fan of Joe Rogan until he switched to Spotify. I've watched like 1.5 on there. I don't know why. I just can't do the Spotify thing.
Really?
Maybe it's because I get on YouTube and I just got the thumbnails. I can just scroll, click Spotify. I feel like I gotta go on there and search. It sounds
It
very
is a
lazy.
bit cumbersome, like if you're not used to it,
Yeah,
like trying to find people.
like
Or
I'd
maybe,
rather just show me things, show me what I want to see or
yeah,
hear, like
yeah.
YouTube does.
Or maybe we're just dumb. That could be it. We could be dumb too. We could not be within the hip crowd, the young crowd. We could be getting old, Don.
I'm fine with that because I'm sleeping like a fish.
$1.86 per share was expected for Visa, and it looks like those earnings are out. $7.55 billion in revenue. They came in at $1.93 per share. As I mentioned, $1.86 was expected, so they beat there. And it looks like they came in. Revenue rose 18.7% year over year to 7.79 billion versus 7.55. The board authorizes a new $12 billion buyback and a 20% dividend increase to 45 cents per share. Looking at the stock right now on Visa, and there is some movement there too. Enphase just actually went red after hours. We'll look into that as to why, perhaps, but that was a monster move. Yeah, so Visa is not tearing anybody's face off, but it is green, and they had a pretty solid quarter. That buyback is certainly going to be nice for investors as well as that dividend increase. I'm,
We're
you
talking
know,
about Visa with the
yeah,
huge dividend increase.
yeah.
Okay,
Visa had a 20% dividend increase. These credit card companies have just gone through it. American Express is down a ton, Visa is down a ton from their highs, but they continue to kill it. And you raise a lot of questions with people because they're like, well, credit is going up, credit balances is going up. We haven't seen credit balances like we had like this in forever. Certain cases you can make the arguments at all in history. I'm not quite sure what to make of this just yet. There's a lot of people that have mixed feelings about Visa and the credit card companies in general, and everybody going into debt. Um, so we'll see how this plays out. So far, it seems as if Visa is doing just fine and people are paying back their bills no problem. But we will see how that shakes out later on in the future. Right now, though, their quarter was pretty solid. So a beat on earnings per share, a beat on revenue, and then $12 billion buyback, as well as a 45-cent dividend. That is a 20% increase from their normal dividend yield. So that is pretty good for Visa, even though it's not moving all that much right now.
yeah, I was as far as Visa goes, I was actually more curious just where they're going, like how people are spending debt, more of an economy outlook more than anything. It's kind of how I was hoping, what I wanted to gain out of that. I don't, as far as I guess it's good and bad if people are still spending. It's good because people still have money, but the feds don't want people spending money.
I
So
know.
I guess at this point we got to play like chicken with these feds or something, or just everybody has to just pretend they're broke for a month or something, and then
I
don't
know.
buy anything for a week or something.
That's certainly what it feels like, right? I mean, it just there is this game of chicken that's going on. It's like the Fed, 18 months ago, probably not even that. Their main priority was getting everybody back to work, and they wanted the unemployment rate to be as low as they could get it. And then all of a sudden, now they want people they want people to lose jobs. They want the jobs rate to go up. So I don't know. It's very interesting to kind of see how they have been, you know, pushing this narrative because I don't think that they even know where they want it to go at this point.
There you go. And someone said in the chat, just to clear this up, like I didn't know if the I was bouncing through charts as people are going in the comments. So you're reading off the earnings. I'm just kind of going through them as people are commenting, and then I didn't even think about it. Someone's like, "Is it out of sync because this chart's up?" But Brad's talking about Visa. So just to clear that up, as people were going through the comments, I was going through this. Uh, there's
Yeah,
some good comments. So like the feds can spend money, we
yeah,
can't.
yeah, right. So it looks like you have Chipotle there pulled up on the right side of your screen.
Yeah.
Is that what you got? So it looks like Chipotle came out with their earnings as well. Let's see what I can find here. So estimated earnings per share were expected to come in at stocks right now is up 4.33%. Estimated earnings per share were expected to come in at $9.19, $2.23 billion in revenue. Not one bad revision or from any of the analysts here over the last quarter, it looks like they came in and are telling investors that they have pricing power. People are willing to spend more at Chipotle, and Chipotle is more than happy to raise their prices because of that. So they came in and they said same store sales rose 7.6% in the quarter. Chipotle raised menu prices for the third time in 15 months in August. And they haven't skipped a beat. Earnings per share came in at $9.51. As I had mentioned earlier, 9.21 was expected. Revenue came in at 2.22 billion versus the 2.23. So a slight miss on that, but not a big deal. The burrito chain reported third quarter net income of 257.1 million or 9.20 per share. That's up from 204.4 million or $7.18 per share a year earlier. The company reported paying more for dairy, tortillas, avocados, packaging, and labor. Nobody's surprised by that. Excluding the $3.5 million in separation costs tied to the departure of an employee, corporate restructuring, and other items, Chipotle earned $9.51 per share. Net sales rose 13.7% to 2.22 billion, as I mentioned, fueled by the same store sales growth of 7.6%. That's interesting. The stock's up because of their pricing power, but revenue wasn't up, at least to what the expectations were. They basically came in line on that. Yeah. But there's growth everywhere else. In-restaurant sales climbed 22.21% during the quarter. It's a sign that customers are returning to Chipotle locations in order to order their burritos and tacos.
I will say, even my chat said I'm probably half of these earnings. If my avocados don't start coming with actual cocaine in them, then they better chill out on these price increases. Okay? Like they better start getting these avocados from the cartel, or like chill, because it used to be $8 for a burrito, now it's like 18. It's something ridiculous.
Yeah. It is crazy, but people are still spending money there. It doesn't seem to be slowing down the stock at all. We did see, revenue basically come in line with them, but they're growing everywhere else. Same store sales are growing. We're seeing an increase in earnings per share. No surprise there because of they're able to, at least right now, pass on the extra costs to the consumer. So we'll see what else they have to say as far as guidance is concerned, but those are your numbers for Chipotle. I know that somebody else was talking about Texas Instruments, and it looked like that company had actually dropped in price after their earnings release. Let me see if I can find that one for you guys as well.
Turns out they come preloaded with Google on them.
Yeah. Texas Instruments, yeah.
Yeah. I just found out my friends used to play Pokemon on Texas Instruments. I didn't know, like, the graphing calculators, you can load stuff on there.
Oh, yeah. You can do a lot of things on those.
That's what he said.
They're like
I don't know why everyone's so hyped about this stuff.
They were like the first smartphone, really. Just didn't have phone capabilities. But
I guess I was just stupid because I had no idea. But I had one. I had no idea.
Oh yeah, everybody had one. Like if you were in a major math class and you needed one. So Texas Instruments, they came in $2.47. They beat the estimate by 8 cents. Revenue of $5.24 billion. They beat by $100 million as well. But they guided below Q4 consensus. And we always talk about this. Guidance is everything in these, for the most part, in these earnings calls. So they came in and guided for the fourth quarter in the range of 4.4 billion to 4.8 versus the 4.94 that was expected. And that's Q4 going into the holidays, of course. And so Texas Instruments isn't expecting a decent Christmas this year, apparently. Earnings per share between $1.83 and $2.11 versus the $2.26 that's expected for the fourth quarter. They say they continue to expect the 2022 effective tax rate to be about 14%. I wonder why that they're actually guiding below estimates here for Texas Instruments, especially because they actually beat on expectations this quarter pretty handily.
Oh, so I have a question. Why even buy a calculator?
Well, they're not just calculators. Texas Instruments isn't.
Okay, what else do they have?
They have all kinds of other electronics. It's like office equipment, that sort of thing, computers.
I feel like I've seen the name. I just can't figure out what they actually do. Because they it's almost like, is this the next case of GoPro? Like
No, no, no,
we've
no.
made this argument a lot.
So
Like why buy a
Tex-
GoPro when your smartphone has an auto
Texas
monitor?
Instruments is like a smaller semiconductor play. Think of it like a Qualcomm, what
Okay.
have you. So they sell semiconductors to electronics designers and manufacturers all around the globe. They operate two different segments. They have analog and embedded processing. Analog segment offers power products to manage power requirements in various levels, including battery management solutions, DC to DC switching regulators, and AC to DC and isolated controllers and converters. So they're really into like the guts of tech and semiconductor space.
Hmm.
The closest thing I could compare them to is something like a Qualcomm, and even that's probably stretching it. But they're in the semiconductor space for the most part, which this should bode well for something like you know Nvidia or AMD or what have you. I think I forgot what ASML's earnings were like, but I mean the guide down probably isn't going to help any of them at all. But I don't really understand the guidance either. We'll have to take a look a little bit deeper into that. But I'm sure we'll get some light shed on this from our AMD and Nvidia call earnings, which I believe are next. I think AMD is next week, and then Nvidia is in a few weeks.
Yeah. They'll likely move together. Well,
Oh yeah,
yeah, sector wise.
yeah, for sure, for sure. Okay, so yes. A lot of people chiming in on what Texas Instruments does. So, thanks, guys. We certainly appreciate that.
Science equipment.
Yeah,
I like that.
absolutely.
This guy
So,
played
guys,
Super Mario.
what's that?
He said played Super Mario on it. Super Mario on a TI calculator way back in the day. Thought it
No
was
shit.
revolutionary at the time.
Yeah, that's like playing on a Game Boy back in the day.
Well, that's what I did. I played on my Game Boy in class.
I did
I'd like
too.
hide it behind my binders. The teacher didn't know. Like
Same.
I didn't know I could just hide in plain sight. Like I thought I was like such a rebel. Turns out I'm just the idiot in the corner. Everyone else is just playing the same thing on their calculators.
Yeah. So I see that somebody was asking about did we touch on Coke this morning? So we did not touch on this, but if you guys are in the Chaos Crew, I actually talked about this being a stock to watch this week, which was Coke. I can give you the numbers on those real quick. They actually reported this morning before earnings came out, and they came in, I believe, and did quite well. They came in, beat earnings per share, beat on revenue. They smashed organic sales expectations, it looks like, as well. Organic sales were up 16% during the quarter versus the 9.8% that was expected. That was led by a 20% jump in Europe, Middle East, and Africa region, and 18% pop in Latin America. Organic sales were up 14% in North America for Coke. This is just another company that continues to absolutely crush it. And listen, the value stocks have already been doing pretty well. Coke's been outperforming the S&P 500 all year long. Hasn't been green on the year, but just barely red. So if you wanted a place to park your money, Coke's been a great place to do that. Plus, it gives you a decent dividend as well. I believe it's around 3.3 or 3.4%. Operating margin was around 29.5% of sales, 29.5% of sales versus 30% last year. Comparable operating margin was great. Compressed for the beverage giant is strong top line growth was more than offset by the impact of the Body Armor acquisition. Looking ahead, Coke expects to deliver organic revenue growth of 14 to 15%. This is a company that's been around for 100 goddamn years, and that's the growth that they're talking about right now. Shares of Coke gained around 2.5% today, but guys, like I said, I think if you're looking for a safer spot to park your money, this is definitely something to certainly consider looking at, especially with the value stocks being where they're at. Fundamentally, they're cheap. They have a decent dividend. With markets being all over the place, they're typically one of the lesser volatile type stocks out there. So Coke also clearly has pricing power with the smash that they actually had on earnings.
Yeah. Plus, having some of these on the back burner just kind of keeps that dividend kind of just shovels you a little more. Well, it can erase some of your mistakes. It can provide you with some YOLO money if you guys have a habit of gambling. They're not bad plays to have your money work for you. Just a much slower pace, but definitely a much more consistent for those of you guys that are into trading or YOLOing options. These aren't bad to have on the back burner for a bit.
Yeah, yeah. They're just more the stocks, and even on the option sides, they're just way more easy to manage when they're not as crazy volatile as some of the other ones are, especially if you're just getting into the game.
For sure.
Um,
Can the earnings call conference? Can the earnings conference call rebound Google? It certainly can. That's where we'll find out if there's anything. There's no talks of buybacks, is there?
on Google, no, they're currently in the middle of one though, from what I remember.
Okay.
It's a giant one, I believe too. I think it was like I know Apple's was about $90 billion buyback, and I think Google's was somewhere around 40-50 billion dollars. So like it's a ridiculous buyback. They're still in the middle of that one, so I
Okay.
wouldn't imagine that they would add any more to that.
Looks like the whole market's feeling the gravity of these, because even Apple sold off after hours.
No surprise.
Yeah. They want us to look at MCO. What is going on with this? Moody's. It's a pretty
Moody's
Moody's.
Corporation. Yeah, that stock is gone nowhere after hours. I don't know why. What are we looking at for?
It announced this morning. So gap down. Looks like the
Okay.
earnings sucked. Gap down and then just sent it the rest of the day. A little check mark day for them.
Yeah, I see that.
There's like no volume in it though. No one's trading this.
No, I don't think I would even bother with this one.
So Danny says it's 70 billion for Google.
70 billion. That's what I knew it was. I knew that Alphabet or the Apple was 90, but I couldn't quite remember what Alphabet's was. Yeah, I mean, with a buyback like that, they don't really need to announce another one.
Yeah,
I think they're going to be carrying on that one for a while.
I remember hearing that. I remember something about a buyback. So I don't know if they were talking about a future one or if I'm just confusing that with Tesla. But yeah, I remember. I remember now. You're right as far as the announcing the decent one.
Yeah,
2 quarters ago.
Massive.
I need to go ahead and pick it up right now before tomorrow.
So I'm checking. Hang
on, let me find out. He was asking about SQQQ.
Well, I'm checking out on a couple of other ones, just like that. We're reacting in sympathy, and we talked about Meta Platforms. They're going to be releasing their earnings tomorrow. That stock's now down 3.6%. You know, it had a pretty decent reaction to Snap's earnings last week. I think it had a 4 or 5% drop on that. Listen, you know, we're now below where we were during the lows of 2018. If you guys recall the market correction that we saw in 2018, tech took a huge hit. So not only are we below where we were during the pandemic lows, but now we're back below the, I don't know if you want to call it a crash, but that sharp correction that we saw back in 2018 on Meta Platforms. The stock is now valued at around 12, 13 times next year's earnings. Listen, I'm not going to sit here and tell you what to do. As we mentioned at the top of the show, we're not your financial advisors. But if you look at this stock and think to yourself that I don't want anything to do with it, I don't know if I can help you. One of the big reasons is that, you know, the stock market has everything to do with buying low and selling high. With Meta Platforms, it's a company that's bringing in $40 billion in free cash flow every year, and it's valued at 13 times next year's earnings. I just don't. That's really the only two numbers you really need to know. They're bringing in stupid money. They're still really ridiculously profitable. They're investing in the future, and it's tough for them right now in the here and now. But I'm telling you, if you look at this at $132 a share, I think you're going to be kicking yourself a year or two from now, and then beyond that as well.
Yeah, I gotta say I'm pretty biased on this one, being in my number 2 spot. This Meta held my number 1 position in my investment account for a while, but the volatility that we're seeing now is because Meta was actually just mostly investor owned. Retail wasn't about this one.
Yeah,
you know, retail loves Tesla. Well, a lot of investors are either they went cash, they're pulling out for the recession and all that, but then it's a matter of time before those investors get back in and start deploying that cash again. So I bet this would actually almost be a good gauge for when they get back in, watching them come up. Because when the tide does come back in, you're going to see stocks that just don't come back. Like they don't get the, I won't say the lifeline. They don't get their life back.
Right.
Where there's things like Google and Meta. Now, I personally believe this, and I guess I have to say I'm biased because it's in my personal account. Is that a stupid disclaimer or what? Because like, why wouldn't I be buying it if I didn't if I didn't believe this?
Right.
I think those get the money first when money does come back in.
Yeah, I mean, think about all the eyeballs that that Meta Platforms reaches and that Alphabet reaches, and that when dust settles and this recession starts to make the curl back up, right? As far as the economy is concerned, like you said, where's the money going to first? It's going to be the companies like this, and
Yeah,
Microsoft and Amazon and Apple and all of the other big ones. So I don't think that there's anything to necessarily worry about here unless you're ready to retire tomorrow and you have Meta in your portfolio, right? I think that's the only big reason why you should worry. I think for anybody else, I think you just weather the storm. It's not fun right now, but people like Don and I, we're looking at these prices and thinking to ourselves, man, where can we find more cash? Is it under the is it under the couch? Where can we dig up some more cash to
I
buy
rob
this up?
people.
What's that?
I rob people.
Yeah, right. Who do I need to carjack so I can buy more Meta? So that is kind of our mentality. When things are this depressed, it just makes us want to buy it even more.
Yeah, I'm actually pumped. Someone said no one wants to buy Meta because they're spending all their money on the virtual reality when they should be stacking it. Like Meta makes so much money. Like it would be
There's
stupid for them to just stack that much money. Like what do you need that much for just sitting around? Like you need to deploy. It needs to go somewhere. They're
Yes.
spending that much money on the metaverse and still have cash left over. So like what do they need to buy? Like the argument would need to be like we ran out of money but we still want to buy this. Now where do we get some from? Like that would create a different argument, but they have so much cash that they're still just making it. They can't spend it fast enough.
Yeah. We're going to do a deep dive on Meta Platforms as they will be reporting earnings tomorrow after hours. I did just want to address this. So Ti Brand says again, guys, this is not the time to be aggressive. CL and KR are less aggressive for today. Just my opinion. I don't think that there's. I'm not. I don't think Don or myself were saying that you need to be super aggressive. But if you have a longer time horizon, if you're a younger person, if you have plenty of time before you retire, I'm not saying that you have to go and be crazy aggressive, but at the very least, have a balanced portfolio. You can own Kroger, but you can also own Meta Platforms. You can own Coke, but you can also own Amazon because those companies aren't going anywhere for a very long time, if ever. I mean, they're just so big right now. I just don't know what brings them down, and who knows? The unforeseen always kind of gets you right, but I don't think that they're going away anytime soon, or maybe even in our lifetime. So having some sort of barbell approach or some sort of balance certainly makes a lot of sense. But if you have a lot of time on your hands, I would definitely consider being more aggressive now than anything. I mean, you're looking at a lot of these companies, and the risk versus reward is far better than it was 18 months ago or 2 years ago. Far better. And now we're looking at prices that we haven't seen out of Facebook or Meta Platforms for almost 5 years that we haven't seen these prices or this valuation down here. And if you ask me if I think that Facebook or Meta Platforms is more valuable today than it was 5 years ago, the answer is an emphatic yes. So it's like, why wouldn't I consider buying down here?
Yeah. Yeah. And I guess to make comments like this, it's hard because when I talk about Meta, like I'm largely talking about my investment account because I like it so much that I am that hyped. And my income is from trading. So I don't mind shorting things. There's plenty of times I've short Tesla in my trading account too.
Yeah.
Well, that's my number one position. But right now, I think a lot of times it's just more important now than ever to match your time frame with your trade because we're bleeding into as traders as hey, this is a good opportunity to buy for my investment account.
Yeah.
So then you make comments like that, and someone's like, "Hey, easy, pump the brakes." It's like, well, as long as you have your risk managed and your plan, and a full plan is that entry, where your exit strategy, all of that, all the what if questions answered before you ever click the buy button, then you should be okay.
Yeah, I agree. I agree 100%. So, guys, that's going to do it for today's show. We certainly appreciate it. Make sure you hit that thumbs up and hit that notification bell because we'll be back tomorrow to react to a lot of other earnings that are going to be reporting. As we talked about, Meta is going to be reporting tomorrow, Ford, among many others. We'll be discussing those. GM had a great quarter, and I think that Ford's certainly set up to have one as well. So we'll be talking about that. I can't wait to react to those earnings. And, guys, thanks so much again for hanging out. Hit that like and subscribe button, and we'll see you all tomorrow.
Have a good one.